So, like we did last week, we're going to go through this week. I've already took the liberty of replaying it back to, this is the weekend, right? So the weekend's action, the prior weekends, and this was the week before, right? So we analysed this one on the last session. So obviously this is session 2. What I've done is I've marked out the 15-minute break here and then the 15-minute break here. And of course, just a couple of things that are really, really important to understand, right? A lot of the time, whenever we're thinking about like supply and demand zones, the hardest thing to understand when it's going to happen is the break, right? The 15-minute break trend change. So whether that's a break to the downside or a break to the upside, that's the one we're never going to know, because if you think about it, we have it as we label that as a weak low or a weak high, representative of the direction you're going in. So if you're going, if price action's bearish and price is moving down, well, we expect to keep making lower lows, right? And so that's weak. What we don't know and can't anticipate is when that trend change is going to create a 15-minute uptrend change, therefore creating a difference. So it's always, when we're putting our supply and demand zones, in this case bearish, we're putting supply zones in. We never know when it's going to break, and that's the key thing. But there are ways in which we can mitigate them as good as possible. That's the first point I want to make. The second point, and this is really important, is we're all degens are out, right? We all like to trade, and sometimes that trade can be, we can go excessive with our trades, right? But for this to work, and I'm deadly serious about this, for this to work, we've got to have some sort of discipline, because whenever I'm talking about a risk to reward ratio 5-to-1, my layout or the capital every time I'm trading, specifically on this funded account as an example, is the same relatively. So if I'm trading $1,000, right, and remember this is all scaled because of the way funded accounts work, but if I'm trading $1,000 as my risk, and I'm risking 5-to-1, I'm risking $1,000 on the hope to win $5,000. Ergo, if I come to a point where I get 2 or 3 losing trades on the run, which is of course very possible, that third or fourth trade could be a 5-to-1 risk to reward, and therefore it's kind of, you just got to take the bumps and the bruises, but have a steadfast mindset that even if these things don't chase trades. Like what I'm trying to say is, if you have a loss, don't double up and go 2k or 3k and think I'm gonna, it's a bad way to be in it. And the better traders are the ones who can hold discipline when others can't, right? Always remember that. It's difficult, but it's just something you've got to get your mindset into. If you can't get your mindset into that, it's like eventually you're going to lose, right? Because you can't keep doubling up. You can't keep a Martindale method where everything just doubles up if you're losing, and it gets messy and you can do without that, right? So I just wanted to kind of make sure that was a point I wanted to raise here. Okay, so let's get into it then, right? So we have started off with our initial breakdown. So from our perspective, we are bearish right now. As we know, this is what you'll see now is we're going to come into the Asian session, the first trading session on the Monday as we play price in a short while. But first and foremost, the first thing I can see is from this break, the way I map it is always, what are the rules, right? First and foremost, the break that we see from the previous low here, which was this point, you want to see a nice big commanding candle, right? Big imbalance here. The bigger the imbalance, the stronger that level is, right? Just purely based upon the fact that it takes a lot of capital to push that price down there, specifically on Bitcoin. Now in the past I was analysing on USD rather than USDT, right? So I was using ACAP. I'm now using, I think this is MEXC's, but it's very similar to Binance's perpetuals. So this is all based upon the perpetuals. So based on my kind of rules, number one, that's ticked, right? We get a nice big candle. The third candle between these two candles creates that nice imbalance, and we're anticipating that the zone that I want to try is obviously this candle right now. Because of the way we've got this kind of congestion here, and to give myself a bit more room to move, I'm going to raise it to catch them candles as well, because I'm assuming if I go to the 30-minute or the 1 hour, yeah, you see it's more of a single candle, right? You can see there. And so sometimes to figure out where that is, you want to make sure that you've got that additional time on that. So if it's not clear to me on the 15-minute, and I do this automatically, I don't need to go, and you shouldn't either, you don't need to go up to these other time frames. You can kind of see that there's the imbalance here but you've got that initial one. I'm just going to capture these as well because you'll see why it's important, right, as we go on. So this would be classed as a medium-term demand zone, right? Sorry, not demand zone, my apologies, supply zone. I forgot that wrong. Supply on sell, demand on buy, right? So that would be a supply zone, right? So where people are going to want to sell from. The logic behind this, by the way, is when you get a big sell-off like this, clearly big players have come into the market, right, and done a lot of sales. But oftentimes, with this move, we leave a lot of trades behind, right? And so usually what you'll find is the market algorithm, call it what you want, likes to come back and fill these orders. But of course, those bigger players who've initiated this move down, they want to defend that, right? Because they've all shorted all the shorts at this stage. Also, what you can find that this can be a sell to buy move as well, which is why we've always got to be careful. Sell to buy meaning if there's not enough liquidity to drive that to start pushing the price up, price will naturally keep moving down to trap a lot of traders. Module 4 goes into depth on it's liquidity concepts, but basically thinking about an order book, if a bigger player wants to get a price and he's not happy with a price, he doesn't want to take the spread or the slippage of, you know, getting lots and lots of small orders across an order book, because his average entry cost at that sell price is not going to be nowhere near what he wants it to be. And so what they will often do is push the price down into a zone where there's a lot of liquidity and then smack it with a load of buys, right? If you're not familiar with that, I urge you to make sure you watch a few times module 4 to go into detail a bit about liquidity concepts. Okay, so now that we've got that out the way again, we're going to continue on, right? So we're on the 15-minute. Of course, we're anticipating price to come into the supply zone to take our trade. Now, what I always say is there's a lazy way to do this, but lazy in the sense that it's a high risk, and there's a less risky way to do this. And the less risky way means that you've got to look at the charts, you've got to keep on with them charts. So that's the thing you've always got to be mindful of, right? So if I was to put like we done last time, if I was to put a sell order in, shorten here, you know, and we're sort of just going just above this zone, because now what have we got here, just to make sure that we're covering our tracks here. This is the high, yeah, this is the move that broke that zone, so we call that the internal strong high, right? We don't anticipate that that's going to break, and then we call this the internal strong low, right? Sorry, the weak low that we expect to break. And so the lazy way, let's say lazy, but if you can't look at the charts and you just want to go, you know, with a risk to reward ratio of, well, for me it's always going to be 5, right? Because I always want to have a 5 risk to reward. What I would do is, let me take that off auto. I do 2 things, right? If this looks a bit too long for me, that's 5 there. Okay. If that whole zone looks a bit too wide, I can say, well, let's move this up to 50% of the zone, and then therefore it allows me to bring this back up, as you guys know, right? That's now 5-1. Of course, the offset of that means that price has got to move deeper into that zone. The risk side is immaterial. If I'm risking $1,000, I'm risking $1,000 between here and here, irrespective. If I push that down, it's still $1,000, right? That again, I think it's module 6. The risk side, it's relative to wherever I put that. It's still going to be $1,000 risk to me. It makes the risk to reward easier or less of a move to make you 5-1. But equally, it means that I can't get that trade if it goes in, right? Because it might just wick and I might miss the trade. So that's obviously, you know, what we're going to look at there. Okay, enough rivel ravel. Let's keep going. So let's hit play and let's see what happens as we move on here, right? Of course, now we get a new break. Okay, so that has to go there. And then we have to create a new break really quickly. So that becomes a 15-minute breakdown. Okay, 15-minute break. Now we have a couple of ideas here, right? So yes, we have a supply zone here, but the break here did not give me a valid supply zone because we don't have any imbalance here. right? There's no imbalance between any of these candles. And so for me, that's not a valid zone that I would entertain as a supply zone. So I'm going to stick and maintain with the original one, right? Just going to hit play. Ooh, came very close. Okay, so we tagged it there, right? So we tagged the supply zone here, which we marked out from previous. And so the lazy way, right, is that, remember, it's just going in here. Oh, wrong one. Short position. So we got filled. And we're going for the 5 to 1, which is, I don't know, all the way down there, right? Something like that. We hit play. Okay, so what did we get? We got at least 3.7 at this stage, right, from that supply zone. But we're greedy, right? So we wanted the 5. Just gonna stop this here because there's a really important point that I want to make. So if you're thinking logically, right, we've come into this zone now. We don't know what's going to happen. Is it going to come back out and come back down, or is it going to blast through? And so let's just think about it. Let's take this off. Our job as traders is, when we come into this supply zone, is to analyze what's going on with the market, right? Is this a trade that we want to take? Okay, so that might have been a trade that we'd have took, and okay, it came down, gives what, 3.7 risk to reward. But what you'll notice here is this didn't give us anything that is usable to us, right? So what I mean by that is, if I go back, let's just cut that down to here. Session 1, right? If you remember, we talk about market structure, where remember that trend change. So we get like higher high, pullback, higher high, pullback to higher low, higher high, pull back to higher low. But then when we don't break that next high, we get a trend change, right? And then we mark that trend change. And so when we're coming up to this zone, the first thing that we want to see on the 1 minute time frame is, when do we get that trend change to the downside? Because that's a good thing. That's a good signal that we want to see. That gives us the confidence that actually the supply zone's doing its job. Therefore, the trade's a valid one. So let's just, push this on a little bit, right? And this is on the kind of my 1 minute analysis, right? But remember, it's fractal. The market is completely fractal. Price doesn't know what time's doing, and time doesn't know what price is doing. That means it's irrelevant whatever time frame you're on. It's all the same price action. It's just looking at different intervals of that price at any one time. Whether you're looking at the 4 hour or the 2 minute or the 1 minute or the 5 minute, it's always the same price. They just don't know each other, right? So the point I'm trying to make is, whether we're analysing on a 15 minute or the 4 hour, it's the same relative price action and market structure on that 1 minute. And so we want to see the same thing. This is really useful for scalpers as well. When scalpers are thinking about scalping on the really small time frames, this is also a really good method to kind of get your head into. So let's just mark something out, right? Very quickly, we'll go. So we're moving up now, right? So what do we call that? We call this a weak. I'm not going to mark it, but this is the weak. Sorry, this is the strong low, because price is moving up. This is the weak high, right? And I'm not going to do it because it'll take me too long, but that'd be a 1 minute up break, right? Okay, so we make a break. There's the break there. I'll just do it for the fun. There's a 1 minute break. Okay, so we can then move this to there. Okay, keep going. We're now approaching the zone. Of course, we have a new. We can have a break there if we want. Right. So another 1 minute trend change. 1 minute. Let's very quickly mark that out. And then we have a high here. Now we're getting nervous though, right? Because we're approaching the zone and we're thinking, when's the opportune time to hit that sell button. When are we going to sell? And this wouldn't be a limit order, this would be a pure market sell, right? So you're going to hit market sell and then put your stop loss in after the fact, once you've figured out what your risk to reward ratio needs to look like, or your position size relative to that. So let's continue. Remember, for us to get confident, we want to see that low break for a trend change, a 1 minute trend change. At the moment, it's all high, right? So then we move that there. Didn't break the low, okay. Break the high. Okay, so now we're in the zone. Yeah, and we're still thinking in our minds, when's this going to break to the downside? So the only movement up there is just that small one there, right? Remember, this is the zone that we're going to sell into, right? Come back down. Just draw our last market height there. There's our 1 minute range. We want to see this break. If this happens, and we get a 1 minute trend change, for me that's a valid. We've had a good rejection, right? We've made consistent higher highs on the 1 minute, then we get that break, comes down, we get the 1 minute trend change when we hit this low here. Unless that happens, we're not confident, right? What happens next? Absolutely pulverizes through, right? So what we've done here is we've avoided getting into a messy trade, right? And the most important takeaway from this is now we've had a 15-minute trend change, okay? So what was previously, I'm just gonna go back to the 15-minute. What was previously bearish, down, 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 we've now had a trend change. Also, we've avoided getting into a messy trade, right? So the multi-time frame analysis piece, of course, it's difficult because you need to be at that chart, right? And so a lot of the time, what I will often do is set myself an alert when I come and approach this zone, because when you set yourself an alert, okay, now I've got time to get in. The zone is big enough to give you time to watch what's going on with that price action. If the price action is not going to give us that signal, we're not going to entertain it, right? And so this is an avoided trade. It's a trade that we thought was going to give us a good utility because of the supply zone here. But oftentimes when supply zones break, by the way, they don't just break, they absolutely get whacked, right? Like this. They often just like really blast through. So that's always a good signal that, okay, now we've got time to change. So that's now been obliterated, and now we've got to think, okay, we've flipped. We're now thinking logically, we only really want to look at zones that we're keen to look for demand, right? And so here's the thing, again, it's a bit about liquidity, right? So we could say, well, maybe this needs to be the supply zone, because here's where the move started. And I would say, yes, possibly, right? This is a difficult one. Here's where a little bit of nuance comes in my opinion. Okay, so we could say, okay, if price comes back into the demand zone, I'm going to buy, right? Remember, we've got that. It does look like a nice, favorable demand zone. I will grant you that. My concern with all of this is we have not taken any of this liquidity that's been building up here, right? And that is always something that I'm nervous about whenever I see that. So this didn't take that liquidity, and so okay, we created liquidity down here. Of course, all of these stop losses that we're getting put into here and high leverage traders come in. Of course, we get that big move up, big move back down. There was a lot of flushing out, right? But since we got down to this level, or this one rather, we've taken no liquidity. And so I always think to myself, when we see these kind of moves here, is that the right place to put a demand zone? Yes, we've seen a lot of buyers step into the market here, but the safer play, because the thing that fuels markets is liquidity, right? If there's no liquidity, price will naturally go and find where that liquidity lies. And so whilst this is still absolutely a valid demand zone, I would say we have to operate with a bit of caution with this specific demand zone. So my version would be, well, as sad as it is, I would be more confident somewhere around here, right? The only problem I have with that is it breaks my own rules, because this actually did break the level here with a trend change with enough gusto and imbalances to give me that confidence. So I would say, yes, this is still a valid demand zone, but I would also approach it with caution. I wouldn't just, better way to phrase it, I wouldn't just go blind and go, here's my trade, and I'm looking for that 5-1. Even if it happens, right? It could happen. And I'm going to be honest, this is the trade that I won on. I got a 5-1 on this trade, because I know price comes back down to the, I can remember it. But I had one loser as well. But that loser was the same risk that I had on that 5-1. So I was still 4 parts up, if that makes sense. I only took 2 trades because unfortunately I was working most of the week, so I didn't really get a chance to trade that much. But it was something like this actually, but I think I went about 50% of the way and brought this down to 5. I'm just kind of guessing where this is here, or something like that. Okay, so this is our new demand zone. Supply zone didn't hold, no foul, didn't get into the trade. Zoomed into the 1 minute, seen that the break didn't happen, and that gives us that kind of confidence that, okay, let's move on. I'm just going to do a quick check. There's no nothing coming. Great, okay. But guys, feel free to ask questions in the chat if there's anything that I'm going too fast about. But I think it's hopefully still good. So let's continue. Actually, I tell a lie. Here's what happened. This broke. This is the losing trade I had, right? This was the loss. But then what I did do was I had the second trade here, right? I'm just going to zoom in. I actually posted it, if you remember, in the channel. It was this. See this red rejection candle here, and then price came up. So it was actually, that was there. I think it was somewhere there, wasn't it? But then I had the second one here on that candle, and it tags it. And then what happens now is I got out at a 5-1, but absolutely blasted out again and gives another high. And so I could have theoretically held onto this a lot longer. Obviously I was after the 5-1, but price does come right back in. So that was the winning trade, and that was the losing trade, both off the same move, right? So let's just figure out where we are relative to that. So that was the demand zone. Now again, you know, this is the point I was trying to make. It's because of the liquidity here, and I'm just going to delete this off the page, right? But because all of this is built up liquidity, right? Again, just watch module 4 if you're getting a bit lost as to understand what I mean. But a lot of the built up liquidity here is all the stop losses, all of the people who are waiting to go short if price comes into here. So it's like a double trap, right? Price comes in, smashes through, gets rid of all of the stop losses here. All the breakout traders who are looking for the short all start loading in with more capital. What does that mean to Wales? A lot of capital is getting exposed in this zone, right? So it's kind of like, that was, for me, it was a stupid error on my behalf, because actually I shouldn't have entertained this trade simply because I didn't think about that. I was just looking at it. It looked like a fantastic zone because of the amount of liquidity that got pushed up to make that move to the upside. But of course, you know, just as much liquidity down here, kind of, you know, getting built in this little zone here. So that's exactly what happened, right? And so it just makes you be a little bit more cautious when you're kind of trading these things. So what does that do to our chart? So the low is here, right? That didn't get broken. So then this becomes our new low here. Of course, we had the break. Let's just see how this plays out. So we have the break here. We call that the 15-minute break. So nice thing about this, gents, is we had the 15-minute break. We actually didn't really, if you think about it, you know, from the zone, from that low that was created at this point. Is that? I don't know what that is. Get rid of that. Get rid of that. The low that was there held very well. And so this would have been what we call a strong low, right? Sorry, I'm on the wrong one. Internal strong low. Perfectly does exactly what we normally expect it to do. Once we get that trend change, we get that 15-minute up move, right? So we can get rid of that demand zone because that one obviously didn't hold. Medium time frame demand zone. And then what are we doing again? Same concept, right? We show it. The market showed us what happens where liquidity gets built, and so are we going to get hit twice? And so you'd say, wouldn't you? Well, okay. Well, this was the move that created that, and again, I would not argue with you one bit with that. So that could theoretically be the demand zone, right? However, we have all of this liquidity that has not been taken. All under here, stop loss, stop loss, stop loss, stop loss, stop loss every time. Bounces off this line, bang, price goes up and shoots to the moon. We haven't came back and tested this, right? So this is obviously still a demand zone because of the fact that, again, our rules state that we have to see a break of the trend and the move that makes that. If I go to like the 1 hour, let's see what it looks like on the 1 hour. Yeah, it's nice on the 1 hour, right? You see the initiation candle, this big move up, second move up. This is the demand zone that creates it. Here's the imbalance between these two candles. I'm assuming if I go to the 2 hour, yeah, it's one perfect candle, right? You can see, nice candle. This is why I always zoom out a little bit if it's not clear on the 15-minute, but you know, candle number 1, candle number 2 is the big imbalance, candle number 3 is here. And this is where it's got to close this imbalance here and come right down into this zone. So it's a nice zone for sure. I would definitely say it's a nice zone. But again, from a confidence perspective, because there's liquidity built up here, without, like, what I would love to see, and then I would be more confident in the zone, is if price does this is the difference. So, you know, we're kind of doing this, aren't we? We're doing a little bit of moving, and then this, and if price was to do that, and then do that, right? So it's taking the liquidity from all of these stops, and then goes up here. Then I would love, this would be a perfect demand zone for me because liquidity's already been taken. Because liquidity hasn't been taken, whilst it may come into this zone, I feel like it's going to come back into here because this is the natural supply demand zone. In my humble opinion, could be wrong. I'm fine if I am wrong, but that's because obviously we're in an uptrend, right? Always got to pay attention to where we are relative to the 4 hour. That's absolutely crucial. However, yeah, for me, I will still look at what we're doing on the 1 minute when we come into this zone, but I will not take the trade unless the 1 minute gives me that price action that I'm looking to see. So let's continue and press play. Let's see what happens. Just call that a demand zone. Okay. Sorry, I should just create that high there. There's our week high. Okay. I think this is now into the weekend, right? This is pretty much going to be where we are today. Let's just check that. Still holding, yeah. And that's what. So, like I said at the start of this conversation, I felt like the way I trade, there wasn't an awful lot of opportunities in last week. Sorry, the week just gone. Completely different from last week. Last week there was like at least a trade a day, right? Because it was in that really nice kind of pullback, expansion, pullback, expansion, pullback, expansion. This week, or the week that's just gone, it didn't play nice. It didn't play too nice. It didn't give us a lot of opportunities. This one was a failure because obviously it was a trend change. This came back in, I got that one. That could have been such a sweeter move. I was probably a little bit too zealous. I took the loss on that one because originally I got my original supply zone. So I had the original supply zone here. Didn't factor in the fact that I could come and get the liquidity. Of course, it does that, blast through. Did pick up that second trades here because of this demand zone. Got that 5-1, which was nice, but damn, that could have been a lot more. Look how high that actually went. Theoretically, even if I targeted that 15-minute high there, I should have done that. That probably still would have been about an 8 or a 9-1. But again, I'm happy with a 5-1, but that could have been better, really. And so we come into the weekend. We come into to trading tomorrow, right? So what does our markups tell us? So obviously we've got a demand zone here. For me, the better demand zone is down here. But always being mindful of the fact that we can get a trend change, and if we get a trend change, we flip bearish and we go for supply zones. If we come into this zone, zoom into that 1 minute, we want to see that nice market structure, get rejected at the zone, get a nice trend change on the 1 minute. That gives you that confirmation that price is likely to bounce and go at the opposite direction. So hopefully you guys are still here. Fantastic. So any questions on anything, fellas, before I wrap it up? Because that was quite a nice flowy session, that actually. It's going to be recorded, this anyway, and obviously you guys can watch it again. Better quality on YouTube. It's not. I don't think it's the greatest quality on Discord, to be fair, but yeah, not every week's like that. Some weeks we get really nice, easy to play activity. That was a difficult week, but we always stick to the plan. Have a risk appetite in mind. Stick to that risk appetite. Don't change that risk appetite. Stick with your plan. Stick with the rules. I'm probably going to actually amend that rule about, because I think the liquidity concept is really important. Again, it was why I lost on that one. It's easy. It's good for me to admit to some of the issues as well, because we're not all perfect, are we? So that's the key takeaway for me. It's like, yes, it was a valid supply zone, but I didn't factor, or demand zone rather, but I didn't factor in that liquidity beneath, and that's really what it was about there. Just waiting for Mr. Mouse to. I can see he's aggressively typing, so I'll just, before I close this session, I will just see what he has to say. Could you tell me more about how you take risk on a trade? I understand from your video you recommend about 3 to 5, but wouldn't that hit your stop loss fairly quickly? So let me just explain something, right? So if let's say your account balance is $1,000, I'm gonna make that just purely because it's a nice round figure, right? And so so let's say we want to get a move here. Where are we? We want to go long, right? So for whatever reason, we think this is a good zone. I don't think it's the greatest of zones because of the liquidity, but let's just, for the sake of it, right? So for me, this move here is where I put my stop loss, and I want to get a 5-1 risk to reward. When I'm talking about 3%, like it's 3% of my account, right? So if my account's $1,000, when I'm risking 3%, what's that? $300, right? No, sorry, is that? My maths is terrible. $1,000, 3% is $30, right? So $30 is what I want to risk, whether I put my stop loss there, or wherever that stop loss needs to be. I could put my stop loss there and still have that being only a $30 loss, right? Because that's what I want to risk. So if I only want to lose $30, this is what I've got to do to figure out how to place that trade in the right way. So I'm just going to open up something really quickly. Actually, I can do it on the other one. Just bear with me, fellas. Right, so it's a really important concept, this, right? Because I think if you know this, you're not gonna you'll always know what your maximum loss is, right? So I'm just going to stop sharing this really quickly, and I'm just going to nip into share another screen for you right now. Just if you just click on that, guys, you should be all right. And for my I'm just gonna go to okay. So we're on calc.trade, right? Now, just very quickly on for you guys, obviously when you're looking at that risk to reward ratio, which is where's my entry, where's my stop loss, and where is my take profit, right? On the numbers, like I'll tell you what that trade is. So the entry of that trade, as an example, is 26,562, right? That's the trade. And so if I go into calc.trade, and then on I've got to do this so you guys can see. So on calc.trade, I can go, let me just pull up Excel really quickly so you can see it. So also I can see it, sorry. On calc.trade, I can go, right, entry. So so 3% is my risk, right? I've got $1,000. So I only want to risk $30 on this trade. So the entry was 26,562. 26,562, right? And the stop loss can be what I want it to be. It can be as wide or as short as I want, but for the purposes of this exercise, right, I want it just below that first demand zone. So that puts me at 26,401, right? So I'm going to put in the stop 26,401, and then the exit, well, that's just a take profit, right? So on a 5-to-1 risk to reward, that needs to be, I'm just adjusting the risk to reward module on TradingView. You can't see it right now, but I'm just showing you. So the take profit would be 27,382. 27,382. So that's in all honesty, I don't even need to know what that is, right? If I put something wrong, my stop loss is 26,401. Stop. Entry 26. Entry is 26,562. Entry is 26,562. There you go. Okay. 26,562. There you go. Stop was 26,401. Risk is 3%. Okay. So there we go. Right. So what this is telling us, right, is, okay, I've told this platform what my entry is and what my stop is. They're the two key components, and how much is in my account. What I mean by total capital is how much is in your Binance account or your trader funded account or whatever your account is, MEXC, Foxify. What's the total that's sitting in your balance, right? So not how much you're putting on a trade, how much is in your balance, the total capital that you've got sitting on your platform, right? And then of that total amount, what's the maximum you're willing to risk on this particular trade? Now, 3% of that $1,000 is $30 risk, right? If I get stopped out on that stop, I will lose $30. But of course, if I expand that stop loss, I'm still only going to lose $30 because of one key factor. It's position size, right? So this position size is basically your BTC. That's the BTC. So dependent upon, you see, you can see I'm moving a leverage. What's not changing is this position size, because leverage, we're not thinking about leverage. Put it on cross mode and then put your leverage on 100%. It makes no difference, right? You just need to make sure your leverage is as high as it can possibly go. The reason that's important is, like, if it's position size is what you pay fees on, right? Position size is effectively what you are, borrowing or not borrowing, and which is why the position size is really the key for what you want to put. Like, for me, on a $1,000 account on a 3% risk, I would have to place a trade of 0.186 against these parameters, the stop and the entrance, and that would guarantee that if my stop gets triggered, that I'm only going to lose $30 plus whatever the small fees are, right? Whatever the fees are going to be. I don't think it's going to be crazy on that, but the reward, there's the 5-to-1 risk to reward, slightly over for that $30 risk. If I hit me 5-to-1, I will be up, $152.80, and that's really what it is, right? That's it, you're right. I entered the entry price and the risk. But does that make sense to you? Is that like, do you understand what I'm saying when I'm talking about the risk side here? It's like 3 to 5%, but it's not going to hit you. The stop loss is irrelevant. Before you place your trade, you need to figure out what you position. The key thing is what's the position size for this trade. So you say to yourself, right, how much do I want to risk on this trade? Do I want to risk $1,000? Not $1,000. Do I want to risk $30? Do I want to risk $50? Do I want to risk $10? Whatever it would be. What you're going to tweak and change is your risk relative to your account size, right? So like, if you in your head, if you think, right, I don't want to risk no more than $10 on a trade, I want to get comfortable with the system first, and so I'm happy to keep trial and error until I get to the comfortable position. So let's say you've got $1,000, 1% is $10 risk, right? So every trade would be $10. You'd win, if you're going to go for the 5-to-1 risk reward, you're looking at a $50 trade. If it loses, you're looking at a $10 trade. You could lose 4 times in a row, which is unlikely the way we trade, right? You can clearly see we obviously win a lot. Well, I think we probably get more wins than losses, and then wins are greatly outfavour the losses, right, when it comes to that. Just getting that shifted mentality to know, well, look, the key thing here is what if you see the risk, watch, if I change that risk from 1 to 2%, you'll see the position size changes. So at 2%, it's 1, 2, 4 in terms of your Bitcoin. So forget about your leverage, just put that at 100%. It's position size, that's key. If I take that to 4, it'll be double that, right? 248. If I put that to 8, it'll be double 248. 8%, it'll be 0.49. So the risk size is relative always to your position size. So that's what I would say on that. It's the best way to trade. A lot of central exchanges, they fuck with your mind, really, because you see these leverage. But what happens is you use the slider, and that slider is relative to whatever your trading account is. And so if you're risking $50 on a trade, and then you put that to 100x, actually you're no longer risking $50. You're risking that times 100 plus the fees that sit in there. So you'll see on the slider that your BTC output raises massively. What you're basically doing is saying, oh, forget that. I'll tell you what the Bitcoin position size needs to be, and it will be relative to your stop loss. I hope that made sense. No. The leverage is immaterial. We're not using, like, because we're in cross. There's obviously isolation mode and there's cross mode, right? And in isolation mode, whatever you risk on a trade, your liquidation will be based upon whatever capital you've exposed on that specific trade only. If you use cross mode, it takes into account what you've got in your complete balance, right? So theoretically, if you didn't have a stop loss, yes, you can get liquidated for the total entire amount of your account. But because we're using stop losses, that's why it's irrelevant. That's why, like, you just put cross mode, you put 100% or 100x leverage or whatever the maximum leverage is. That's to make sure that you don't get liquidated before you stop out. So, like, just think of these 2 parameters only. Right, I want to trade. What's my entry? What's my stop? Okay. When I go into calc.trade, I'm going to put my entry level, I'm going to put my stop level, I'm going to put how much I've got in my account, I'm going to put what I'm willing to risk, and then that position size, well, that's exactly all you need. You just want the position size. Go into your central exchange, put your position size of the BTC in there, and then put your stop and your exit, or your entry and your stop loss, exactly how you put it in calc.trade. And I promise you will not fall foul to anything other than if you make a mistake. Well, I've been trading this way for a long time now, so it's the best way to go. But look, keep, test it out. The best thing to do is to just test it out. Like, imagine you've only got $10 or $20. Just like do small, really small trades just to start with. Get used to just using position size as your trade execution, rather than just putting something in and hitting the slider. In fact, just hit the slider first. Put the slider on max, so it's max leverage. Use cross mode, and then go into calc.trade. Figure out what your position size is and type in physically whatever it says. So if it's like 0.041 Bitcoin, put that in, and that will be $10 worth of risk, or $20, or whatever your percentage risk is. That's what it will be, as long as you put the same stop loss in Binance or MEXC or whatever as you did in calc.trade. As soon as you do it a few times, you'll go, yeah, and it becomes really quick and simple. Like, you've got to test it a few times, because it doesn't sound, it's like, hang on a minute, I'm putting me leverage to 100x. It doesn't feel right. Remember, you've got a stop loss. The stop loss is exactly that risk, which is why it's changing the position size relative to the distance between the entry and your exit, basically. So I hope that made sense, Mouse. Okay, my friend. If there's nothing else, I think I'll probably leave this one there. Good session. I think obviously it'll be I'll put it up on in the channel, and obviously I think it'll be a clearer version if you watch it back again anyway. But you know where I am, mate. If you need any questions or anything you wanna ask me anytime, I'll always answer you. All right, mate. Thanks very much for chiming in. Cheers, pal. Speak to you later. Bye.